crowdfunding is going through massive shifts in growth. And with the March 15th changes to the Reg CF ruling just around the corner, this may be the opportunity for bigger companies that are not interested in pre-seed or seed rounds to finally take advantage of crowdfunding. On this episode, we have the experts share their insights around democratizing investment opportunities to the secrets behind the best marketing strategies in crowdfunding. Each week, our Crowdcreate Mastermind series unpacks the insights and wisdom from the thought leaders in your industry.
Welcome to the Crowdcreate Mastermind. So the purpose of this mastermind is really to bring together the community, share your insights, and leverage what we call the wisdom of the crowds. You've all been invited because you're a thought leader and working on something truly exciting. As Ivan mentioned, the format of these masterminds is typically an hour long. We go around the room, 1 minute to really introduce yourself, highlight who you are, what you're working on, and what are you most excited about in equity crowdfunding or just crowdfunding in general right now. We'll also be putting links to everybody's bio in the chat, and we'll be taking questions from the audience as well. So welcome. Ivan, would you like to start it off?
Yeah, well, thank you everyone for joining, and I'm excited to share what we're going to be chatting about on this panel. But my name is Ivan. I'm one of the co-founders here at Crowdcreate. And what we do is we connect people to startups, founders, to influencers, to thought leaders, and we help them grow from a marketing perspective. So what am I excited about is actually creating more events like this where we connect projects with thought leaders. And there's a lot of information out there. We actually like the idea of the wisdom of crowds, where the thought leaders themselves, the banter and the chatter amongst thought leaders and the people at the forefront really shed light to everybody else. So that's what we're working on.
Awesome. And Brian, would love to have you go next and introduce yourself.
Sure. Thank you all for having me. My name's Brian Belley. So I am the founder of crowdwise.org. And, I kind of come from a non-traditional, non-startup, non-finance background. So, in some sense, I'm kind of an outsider. My formal training was as an aerospace engineer. But, I've always had a huge passion for investing. And 2 years ago, decided that I really wanted to take the jump into entrepreneurship. That's when I founded Crowdwise. And we're really focused on providing education for investors and helping the startup founders and the entrepreneurs themselves raise capital through equity crowdfunding. So what am I most excited about? Right now, we're just living through a really exciting time because there is so much innovation happening in the space, as I'm sure everyone on this call is aware of. Just the amount of, the regulation changes and everything else, which has been a long time coming and a lot of time in the works. But, we're kind of living in a very important time where, especially non-accredited investors can participate in these private capital markets, which is great for the investors and for the entrepreneurs. So thank you for having me today and looking forward to a good discussion.
Thanks, Brian. And Evan, welcome to the mastermind. I know you've seen a lot being at Indiegogo from the beginning and now working on blockchain. So love for you to introduce yourself.
Yeah, thanks for having me, and I appreciate the invite. So my name is Evan Cohen. I'm actually the founder of a company called Vincent. Vincent is an alternative investment search engine. So we are an aggregator like a Zillow for investors looking for investment opportunities. I started this company with Slava Rubin, who is the founder of Indiegogo, and I worked with Slava at Indiegogo for 5 years. I ran our hardware design and technology category for 3, and then I ran our investing business and our equity crowdfunding business for 2 years with him before spinning it out to do Vincent. And so our goal really is helping investors discover investable opportunities, basically waking up to the question, I have some money, I want to invest in something, show me what I can invest into. And I'm incredibly excited about all of the, updated changes to the Jobs Act rules and the expansion of the Reg CF opportunities. I'm also very excited about rolling funds. I think that's a really interesting innovation on the venture side. And I think that there's a huge potential to disrupt the pre-seed and seed investment world with the opportunity of bringing individual investors into these managed opportunities.
Awesome. Thanks, Evan. Dara, would love for you to go next.
Sure. Thank you. Dara Albright. I'm the founder of Dara Albright Media. Great to be here. Thanks for having me. I guess my background is a pretty traditional Wall Street background, but I've been on the forefront of the equity crowdfunding movement since 2011, when a bundle of bills was actually just being tossed around the House Financial Services Committee that later became known as the Jobs Act. And to me, this is a really exciting opportunity for to see the democratization of access to capital, both for small businesses, emerging businesses, but as well as for investors, and an opportunity for really the people's capital to finance the innovation of the day. And so what am I most excited about? I'm most excited about the democratization aspect, and we're seeing a lot of that even being played out now in the public markets too, with this whole GameStop and really kind of the renaissance and rise of the retail investor. So I guess we'll talk a little bit about that as this goes on too, but I think it's really an exciting time for finance, and it's an exciting time to be a small business and small retail investor.
Thank you, Dara. Oscar, would love for you to go next.
Perfect. Sorry. My name is Oscar Jofre. I'm the co-founder of KoreConX, and we are an infrastructure company for the private markets. So we are the little tinkering little wheels underneath that is empowering both the companies by providing them the tools in order to be able to transact more efficiently and, more importantly, with less friction, including the broker-dealer community, the legal community, and all the other intermediaries that are involved in the private markets. Today, we provide this entire technology stack completely private label to our partners, whether it's issuers, broker-dealers, participants that are transacting. And for us, what's really exciting is that the Jobs Act is maturing. It's exciting to see the amendments. I think we're using a very interesting word now. It's called level up. Companies need to, with this momentum, what was being done 5 years ago, you can't keep doing it going forward. So it's exciting times as the regulators have given us a gift, a real nice gift with the amendments of Regulation CF and Regulation A+. So, which means we have a lot of responsibilities. So looking forward to the conversation.
Thanks, Oscar. And Chris, would love for you to introduce yourself.
Hey everybody. Yeah, I'm Chris Lamontagne. I'm the CEO of Spring, formerly known as Teespring, which actually was, I think, one of the real early foundational business models in crowdfunding, and kind of really led the charge in allowing independent creators, SMBs, to build businesses online, which originally was started in the ability to kind of start your own commerce business through t-shirts and apparel, but kind of now has grown pretty radically over the past couple of years. We evolved to become Spring about 6 months ago. And that move really is kind of a pretty big shift, and it probably answers the question what I'm most excited about is a pretty big shift to kind of lean towards more the creator economy, or what we call the creator economy, of understanding how independent individual people who've got audiences want to build their own commerce businesses. So we're kind of heavily motivated by understanding social commerce and how that connects into fintech and how it connects into democratization, one of the themes that kind of already got mentioned there. So our business has kind of evolved pretty radically, but definitely has a lot of foundational thinking from crowdfunding. And, we think we're seeing the world in completely different eyes right now. We have a few million users, the platform's growing pretty quickly still. So very keen to get into the debate and hear more from different backgrounds.
Thanks, Chris. And from t-shirts to real estate crowdfunding, Mark, would love for you to introduce yourself.
Hi, my name is Mack Schicktanz. It's good to meet you guys. Glad to be on the panel. I am the CEO at Mack, and we're an investment platform that offers stabilized real estate investments in actually the cash flow of real estate as opposed to the hard asset itself. And we do $25 minimums, and just the way we have it set up, it allows for our investments to be fully liquid. And one of the things I'm really excited about in the industry is just the way how it's changing how people invest. And the ability to get these investments to non-accredited investors is completely game-changing for a lot of these people who are now able to access returns that were only reserved for the wealthy earlier on here.
That's awesome. Thanks, Mac, and I apologize for butchering your name.
Hey, no problem.
Jenna, would love for you to go next.
Thank you so much for having me. I'm Jenna. I'm the founder of Million Marker. Compared to everyone else, my background is a bit different. I'm trained as a dietitian and environmental health scientist. At Million Marker, what we're trying to provide is environmental exposure testing service, allow people to know what they have been exposed to, environmental toxins, toxics, so that way people can optimize their health and potentially prevent disease. As research have already shown that your chronic disease risk, only 30% is contributed by your genetics, but 70% is by the environment. And there isn't really a tool today allow people to do that. So we're trying to do that for everyone. And it seems everyone else is working on democratizing, investment. And I think what we're trying to working on is democratizing environmental exposure assessment and biomonitoring. What I'm really excited about, especially with crowdfunding, is allowing not just raising capital from crowdfunding, but actually building an environmental exposure database that allowing us to democratizing this kind of assessment and pretty much democratizing precision medicine.
Thanks, Jenna. And I also placed a link to your Micro Ventures equity crowdfunding campaign that's live in the chat, so the other panelists can take a look at it.
Yes, thank you.
So we're hearing a lot of themes already forming, but I do want to unpack that, especially we have a great group here. Also, to attendees, you can also ask questions through the Q&A feature and do the chat. So we'll all be monitoring that. And also speakers, definitely check it out. If you haven't answered, you can type it out. But the first topic I want to unpack is, as many of you have mentioned, it's the changes to the Reg CF. And that's coming out rather soon, just in about 2 weeks. And what does that mean? So let's kick this off. I think Dara, you mentioned it earlier. Want to hear from you, and Brian. Like, what are you guys thinking about what's going to happen now that it's going to be changing? Oh, you're muted, Dara.
I'll just start by saying that, when the crowdfunding bill was initially passed, as part of the Jobs Act, when it was initially passed, there was the first bill that was introduced in the House by Congressman Patrick McHenry, was a bill that I thought was a lot better and more attractive, I think, for both investors as well as small businesses. And it kind of got butchered when it went through the Senate. And I think when it ultimately passed in the Jobs Act and through the Jobs Act, and then when the SEC came out and implemented the rules, they made it so expensive and cumbersome. It was really a challenge. For companies that really only at that time to raise $1 million, it almost seemed like it wasn't even worth it. So the first thing I would say, and then, let everybody else kind of weigh in. I think that this was a long time coming, that they needed sort of like, Reg CF 2.0 or 3.0, to really kind of work towards getting this right.
Yeah, I completely agree with Dara, and kind of building on that, right? One of the things that's important for entrepreneurs, and I know there's plenty of other people, Oscar and others on this panel too, who have really been in this since day one, that can talk about this, but the cost of capital is kind of an important consideration for any entrepreneur, right? And how much time and effort are you going to spend to raise a certain amount of capital? So given that the prior limit was 1.07 million for Reg CF, bringing it up to 5 million, which is just one of many of these changes that are going to go live on March 15th, is going to make that kind of an easier answer for a lot of these entrepreneurs, where you're already doing a certain amount of financial disclosure, getting your campaign page, your promotional material. So kind of going from that 1 million to the 5 million now opens it up to companies that are perhaps looking to raise a little bit more. On the investor side, there's also a lot of good updates as well, updating just a lot of things that kind of maybe weren't perfect the first time, but have kind of been evolving, such as investor limits. So removing investor limits for accredited investors, increasing limits for non-accredited, and just other changes as well. It's not just a regulation crowdfunding Reg CF update. They're updating the limit for Reg A Plus up to 75 million, and in addition to that, just streamlining a lot of these exempt offerings. So there's going to be a lot of it's going to be hard to probably pinpoint any one change that's having an impact, but if you kind of look at the industry in a more broad perspective, I think that it's really just going to encourage the amount of people who do use this exemption moving forward. So very exciting.
Anybody else have any insights they'd like to share?
I definitely do. I agree with all of the points that have already been said, and I mean I could continue to embellish on them. But the one thing that I recall from like when we were doing the equity crowdfunding at Indiegogo and what we're seeing now is that the interest to raising capital is on the rise. Companies want to raise capital more than ever. I 100% agree from our experience and what Brian just said about the cost of capital for $1.7 million, or $1.7 million, was just not worth it for a lot of companies. And it resulted in, it made it really painful, right? Like there were a lot of really good companies that applied that wanted to list with us at Indiegogo, and they wanted to do a Reg A, but they didn't want to do the disclosures, and they didn't want to do CF because it was just too much work for not enough money. And then a lot of times they would want to do a side-by-side, which they could do a Reg CF with a Reg D 506C offering, but that created a challenge that you had these accredited investors, even you had all this interest in the unaccredited tranche. So I think that moving the goalpost to 5 million is arguably a game changer. And 5 million is a lot of money. Like most companies, I think that right now, $1 million, even the companies that are doing Reg CF right now are not, like, there's only a handful of them that are really hitting the $1 million threshold. But I believe that when 5 million comes around, we're going to see a lot of later stage, and I don't want to say late stage, but we're going to see some, Series A, some like real seed rounds, not just like, hey, here's an idea, here's a pen and paper, here's my team, and like I'm trying to raise a little money for my friends and family. And I do think that on top of that, somewhat in parallel, we've seen a lot from the crypto world where, you can raise reasonable amounts of money from people that are very enthusiastic about your product from anywhere around the world. And I think that you saw during the ICO boom in 2017 that like millions of dollars being raised from, people on continents all around the planet for ideas that they were passionate about. And I think that now that the Reg CF rules are moving to 5 million, we can start to see that momentum come into like a regulated proper offering for real companies here in the United States that are not necessarily doing blockchain products. So I'm personally very excited. And I think the amount of offerings that are going to go live in the next 2 years on Reg CF could triple.
Thanks, Evan.
Yeah. I was just going to say, I agree with Evan. And just to put it a little bit into perspective, Intel went public in 1971 at a $58 million valuation, but they raised $8 million, which is not far off from a $5 million threshold. So you think about it, and you look in, there was a company, Intel, where the public was able to invest in a company that returned, hundreds of thousands of percent, over the years. So it's an incredible opportunity for retail investors to get access to some of, as Evan said, even some of the companies a little later, maybe not napkin stage, but, maybe, Series A, B, et cetera.
Yeah. Here at Crowdcreate, one of the biggest changes that we're excited about is allowing campaigners to test the waters, is what it's called. It's that basically you could solicit investors, engage interest before you go through all the filing and go through all the work to launching that larger, $1 or $5 million campaign. But we see a lot of people that have businesses that just want to see if there's going to be demand before they actually launch and see if it's worthwhile to do that MVP product.
Oh, it's a game-changing element, along with the SPV rules. I think the SPV rules are actually the underlying, the biggest change that can impact all of it. Because now it creates a situation where, you're a company that could raise money from a tier 1 VC in the Valley, and you can raising money isn't difficult for you, but you're doing a CF campaign not because you need the capital, but because you want to bring your audience and your passionate users into your business and make them stakeholders and give them skin in the game. And I think that is what we're going to see as I know a couple of companies that are really high quality that are launching in the next couple of weeks that, generally would never probably do a Reg CF round because they can go into any big tier 1 VC in the Valley and raise money without the snap of a finger. But they're doing it not because, you know, they need the capital in the bank, but really because they want to engage the audience. And the SPV rule is the game changer that, you know, it doesn't complicate their cap table anymore. They can still have their funds and this SPV of their, you know, passionate users on their cap table, and it doesn't mess up things for a future fundraise.
Jenna, I'd love to toss it over to you because you're doing that exact strategy right now with your current raise on the equity side, because you're engaging some of your fans and the people that are following you to become investors, correct?
Who's that directed to, Ivan?
I was directed to Jenna.
Oh, okay. Yeah, I was thinking about you were directing to me, but I wasn't 100% sure. Yes, absolutely. I was actually just thinking about making that comments is so we can get engaged, and not just investors, but also users on our platform passionate about the product we're trying to offer. Because the ultimate goal, the vision for the company is trying to build the most comprehensive environmental exposure database and advanced precision medicine, at the same time creating a better environment for all. So having this data piece, even for the scientific side of things, the research is extremely important. And this is also, one of the points I'm super excited about crowdfunding is, besides the funding, it's the engaged customers and the passionate users.
And I'm kind of curious of your existing customer database, how many percentage of those actually wanted to become an investor in your company?
Interesting thing is several of our pilot users are actually the first few investors, and then a lot of pretty much tech people. But I think what we want to do is actually expand our user database to all other people, everyone else. Because when you think about environmental exposures, many times it's actually people who are less educated and people who are less, disadvantaged to actually bear these environmental burdens. And so having this crowd is extremely important for us.
Got it. I know Airbnb went public, they IPO'd, and they gave hosts an ability to purchase shares. I'm kind of curious if anybody knows what the insights would be of your existing customer database, how many % would want to be a shareholder in the business? Because that'd be awesome if these Airbnb hosts could have been shareholders.
And Facebook too, back in 2012. I mean, people in the private markets were just clamoring for private shares of Facebook. And, then when they had an opportunity, I think in 2012, to transform the IPO landscape and the way IPOs get done. And I think that they truly missed, what could have been an incredible opportunity for finance.
Chris, you have a very large customer base at Spring. Have you thought about raising capital for your own company?
Yeah, I think we've kind of been through all different tiers of VC financing, and we're lucky that we got the business to a position of profitability, and we've kind of been scaling in that way. But we do have millions of users, and there is a common theme to, I think, the examples that have kind of been mentioned there with regards to platforms like Airbnb or Facebook. Is there's an element of the desired degree of ownership. Like if you're building your business on that platform, or you're investing, or you're using this platform, the search for ownership is definitely there. So we've give that to some of our creators and some of our users, that ability to become owners and investors in that way. I think the thing I'm really cognizant of, and this might be quite a contrarian point, is ensuring that you're returning value, and just kind of creating an ecosystem which allows people to invest great and kind of become super fans. I don't know, as a CEO, I feel like a real dedicated responsibility to make sure that there's value as well for those users who do choose to invest. And I think that to me still feels like it's in flux somewhat. And we necessarily haven't, we want to be very, very focused on that, is making sure that there is some kind of return in the way we think about that. So I feel like we're kind of still relatively nascent in that kind of approach to returning value. So I don't know, it's just something that kind of always plays on my mind if we were to scale that side of our business.
Chris, are you referring to like return of value on your investment, as in like an exit?
Well, return of value for basically the users who are investing, I think, and again, I think this might be a contrarian point, but it's like my understanding, at least, of like all of this new access to capital, I think is like there's a utopian view, which is like there's so much capital coming into the space, which means there's going to be so many more great ideas, which like I fully back and I think is fantastic. But there's also a commitment to make sure that that kind of new capital does get returned in some way as well. And I don't know, for our business, for anyone who knows the story about Teespring went on a crazy growth curve, and then we kind of fell on hard times in 2015, 2016, and we've really rebuilt the organization based on like returning value for our investors. So it's kind of coded into our DNA as we think about fundraising, and we think about that for our users as well. So that's kind of how I'm thinking about it, Evan, but it's just a really important part for us as how we consider crowdfunding or crowdfinancing in that way. Is that coming back to the people who are investing in these platforms in that way?
Chris, you've been Chris, you've been invested by some of the most well-respected VCs. Was Andreessen an early investor in Teespring?
Yeah, Andreessen, Kozler, Y Combinator, yeah.
Wow. So how do you compare the two, VCs versus equity crowdfunding? What's your take?
Is this on the record? No, I'm joking.
Share us the juicy secrets, Chris.
Look, I think we, and again, there's an amazing story if anyone cares to kind of read up about it. There's an amazing, very well documented story of what Teespring was. We went on a crazy growth trajectory, but the business stopped growing in 2016, and we had to rebuild and refactor. And so we're not kind of just like a rocket ship business. We're very much like a business that's kind of been through it. And that's kind of where my questioning comes from, actually, is respect to the understanding that just injecting capital isn't it. Like you actually at some point have got to cross the chasm and say like, hey, how do you build a valuable business and a valuable company? And the past 4 years for us is really that's what we've been doing. The VC ecosystem for us has been great because it was like an amazing platform for us to get scale. We've done over $1 billion in sales. We're a big business at this point, and I don't think we would have got there without scale. But then the comparison to then thinking about, well, how could you incentivize your users, like the users who actually use the platform, to have a degree of ownership? That's actually long-term value that we can create. So that's kind of how I would probably bucket them, Jeff, in kind of two ways. I would kind of say like from an initial perspective is like VC gives you that trajectory, whereas longer term crowdfunded engaged investors gives you that longer term value.
Yeah, I think it's very interesting when equity crowdfunding really went live in 2016, I thought one of the most interesting things that I noticed as a trend was that like there were all these platforms that launched and all these companies raising money, but I had to beg the question, like how many of these companies are really venture scale companies, right? Like how many of them are really like, this company is going to, triple digit year-over-year growth for the next 7 years and IPO on the NASDAQ, versus how many of them are just going to be perfectly sustainable, strong businesses that, maybe are profitable and stay profitable for 40 years. But, that doesn't mean that that investor who put $500 in your deal is going to get any liquidity at any time, anytime soon. So I think it is really interesting. And it begs the question really about the goals of the investor at the end of the day. And I thought it was very interesting that you brought up the point, Dara, about Facebook, because I think that a lot of investors believe that when they see a deal on a crowdfunding platform, it is the next Facebook, right? They're going to hit a home run and it's going to be a 100x investment. And I think that from my experience, a lot of the companies that are raising capital on these equity crowdfunding portals are perfectly sustainable, reasonable businesses that can make real profit and, hire lots of really great employees and be of wealth to the community for a long time. So I think that you do bring up a really good point, Chris, about maybe there's an opportunity here to drive additional value outside of the return of capital, or maybe it's some sort of profit sharing or revenue sharing, something that's unique that, allows maybe not venture scale businesses to still be investable to small individuals, but also like have some sort of return profile at the long term.
And I would ask too, it comes down to the aftermarket. I mean, if you're looking, when a company goes IPO, when we have hot IPO markets, it's because we have a hot aftermarket and we have, enthusiastic buyers in the aftermarket that are willing to support the stock. The problem is now, for a lot of these crowdfunding companies is that we're a long way off from crowdfunding to an IPO. So there's, what could be done in the meantime. So a couple of options or solutions that I've written about and explored. One would be, the opportunity to bring back regional stock exchanges, let's say for local businesses that are, taking the crowdfunding route. Interesting. Now we have this other opportunity because of blockchain and tokenization, where we could actually maybe consider digitizing or tokenizing some of these crowdfunded projects to then create liquidity and other types of in-between markets, between the crowdfunding to the more traditional IPO. So I think there's a lot of ways that it could be played out, or even as you said, continue growing the business and maybe offering profit sharing or some other kind of dividends along the way.
There's a lot of creative mechanisms that we're seeing on the market now. And Dara, you're right. And I know right now another buzzword is NFTs. Like a lot of people are looking into digitization of assets. And I know Evan, you mentioned blockchain, but that entire blockchain boom opened a lot of new concepts. Like, for example, an airdrop. I don't know if you're familiar with, there's this telecom company called Dito that is pushing out in Philippines. But did you know before they went public, they actually made shares available for people just by registering? And it was kind of like a way to get early excitement into it before they even hit the market. So, and I do want to switch gears a little bit to, let's talk about what are those marketing strategies that you're seeing that are the best in equity crowdfunding campaigns? And kind of to go into the secrets, I know some of the panelists are asking and some of the attendees are also asking, but we love to hear from everybody here. Like, what are those secrets to growing and even getting excitement in the aftermarkets? Oscar, we have.
I was going to say, let's turn it over to Oscar first. He's been taking some diligent notes over there, and I know he has a lot to add to the discussion. So,
yeah. So I'm the controversy in the room, right? So, once again, what is the title of the event? Equity crowdfunding, right? U.S.
crowdfunding in general.
Crowdfunding, yeah. So we should probably leave the blockchain wording out of it if you want to be successful with the SEC in any form. I mean, I respect the technology, I truly do, but I think Chris said it best. I think Chris has got an interesting review of his assessment, whether it's a VC or the crowd. I think what we're starting to see is the merger of the two. We hadn't seen that before, but we're starting to see it. I think that's what this amendment will truly do. I think the first phase, there was no commitment to the investors. We know that now for a fact. And we have to say it because we have to be honest about it. It's the only way we can mature to it. I think the second phase now going live on 15th will be different. And part of that is because the maturity of it, $5 million is $5 million. Evan said it, that's a lot of money. It is. So people are going to be paying attention to it. So there's going to be a lot of changes because of that. And so I see that is going to be the fundamental change companies are going to need to change. So how does that tie into your question regarding marketing techniques and all that? It's going to be even more stringent and more carefully reviewed than ever before. We now know the SEC will be reviewing events that are happening when issuers that are on offerings, what they can and cannot do, and those who are retained in order to provide those services. So we're leveling up. This is our great year. This is, as they say, be careful what you wish for because we got it. Now you've got to step up. So which means that we're elevating the industry to the next stage, and it's going to come with responsibilities. And I'm going to come back to Chris again because he said it. I mean, commitment to the investors, bringing a return of value to what they put in. So $439 million is already in. And if we don't get something back to the next batch, we're never going to get that crowd coming back in again. So that's the consequence of the crowd. You burn them once, they're not going to come back. Marketing is going to cost twice or three times more money. So it needs to be at the forefront now. And whether you're venture back or not, you need to really focus on that. That's going to be the real. That's where we're seeing right now. We're seeing companies today that are very focused on understanding the power of the crowd for different reasons, allowing their investors, as Evan indicated, to be participants, but also considering bringing the venture back, the venture model. I do not believe the SPV is going to be as impactful as everybody believes it is, partly because the US did not provide any statutory regulation as to how to structure it. What does that mean? It's an SPV is typically being used by companies in a certain way that the venture capital space, accredited investors are used to using, and they understand it. You hire a fund administrator, there's a lead investor, voila, it's an easy 1, 2, 3. Unfortunately, under Reg CF, that's not what they did. The company is the lead investor. The company is managing the SPV. So therefore, it may look like one investor in your cap table, the company's still fully liable for the 10,000 investors you'll have underneath. So you really, and at the moment, nobody has dared to introduce that to the SEC. Just so you know, this is not a bad thing. This is just the reality. The same way we were when Reg CF first came out, nobody knew that SAFE would be the ideal instrument either. So it's a wonderful time. It is. For me, I am pumped. I've been waiting for this 11 years, and we're finally here. But this is where two things are going to happen. The market is going to see 100 plus platforms, and out of the 100, we're going to be down to about 15. And you're wondering why? Well, there were 51 before the amendment, and there were only 7 that were standing. So it's going to happen again. There'll be some consolidation in the space, and there will also be a lot of flushing of the space, meaning we're going to remove layers of participants because the SEC is stepping in. So this is when you're making a difference, when you got somebody's looking inside and making sure all the dots and T's are being crossed. And PitchBook said it best. For the very first time, regulation crowdfunding is a competitor or something that being connected to the venture capital space. I don't see it as competition. I see it as embracing. Our company, what we did, we married our efforts to bringing it to the crowd and bringing a VC without restructuring ourselves. So there are VCs open to this concept, which I think it's a win-win because we need their help for scale, additional guidance and other elements, but the crowd brings just as much guidance as well to improve your product or your offering in the marketplace.
Those are great insights, Oscar. And I know, Chris, you have a question.
Well, it was actually maybe to speak about the marketing, because Ivan, I think the question initially was on the marketing side. And I have a slightly, we have quite an interesting insight on this one, and I think it could just be a good addition. We're lucky that our platform kind of hosts creators, and by creators we mean people with audiences. So we have like a lot of platform creators on YouTube or Instagram with millions of followers who are building businesses, and that's kind of how our business has evolved. And this may feel like a bit of a tedious link, but I think it links back, is that we see creators on a daily basis pushing products to their audiences, which could be hoodies or toys or digital products. We've just released capability to allow NFTs on the platform as well. And what we're seeing right now is just this explosion of influence, and it's like an era of hype. And I actually, my point was going to be to the marketing side. I feel like it's probably going to get worse before it maybe gets better, in that there's going to be a ton of hype cycles, and there's going to be a ton of like, hey, this is the next hot thing. And I think GameStop was kind of an element of that, but I think it's much, much wider. So I feel that like, whilst regulation may come in and swoop in, I think the problem's much bigger. I think the problem could be that it's really easy for a group of people in a Reddit channel to kind of hype up some form of investment vehicle and people to go down on that, because we're living in this very surface like drop culture where like something's really relevant for like 10 minutes and then we forget about it, and you forget that you've invested all that money that went in it over there. And I think like we see it on a daily basis. We see products trending and products kind of working that way. And that's kind of just like the level of exposure and insights in the way we look at it. And I personally believe it's going to get worse before it gets better.
Chris, are you noticing something that the best creators are doing when marketing their products or their NFTs in terms of getting attention? Is it?
Yeah, it's a part of a macro. The macro really is like for the past probably 5-6 years, there's been a convergence of content and commerce of kind of just like converged to the point where we don't really understand, is this content or is this commerce anymore? And you kind of saw that with like the hashtag ad, right? That was like a big thing that kind of people had to almost say, hey, this is an ad and this isn't something that I'm just talking about. But that there's just been like a cocktail of the two. So we see creators probably most successfully doing those two things at the same time, where it's like there's an organic nature of that, what that person's talking about, and that actually they're selling a product. And this is kind of like very well mimicked in Asian markets as well, right? If you look at kind of what's happened in social commerce in China, specifically, it's kind of this has been happening for like 4 or 5 years already. And I think we're just seeing it kind of evolve. But I do think as we start to touch upon NFTs and kind of hype stock and those types of things, like we're really entering this new wave.
One thing I will add to your comment, Chris, and I would agree with you that I think some of the marketing that's being done is going to be dangerous, to your point. But that being said, there is an industry, a niche within the industry. It's called investor acquisition. And this is important. So we are dealing with a compliant offering. What that means is it's regulated. There's people oversight. So everything that is done, including research, a tweet, a news release, it's all being viewed video. So you need specialists, just like you do for e-commerce. There's an industry created, providers that specialize in that. And it took me a long time, believe me. I'm going to be doing a reggae. It was the most frustrating thing that everybody's, oh yeah, Oscar, I can help you. That isn't the key. You need people who understand that if they put the wrong word on that ad, what can be the consequence of that? So today there are 8 different techniques or tactics that have been successful in raising capital online. Not one is the master yet, but the master is who the provider is. That is going to be the key, whether your company is going to run afoul, which will become a blow up, or whether you will do it correctly and boom, everything's just going to be, cohesively nice. And securities law, it's not something you can teach to somebody overnight. I'm sorry, you can't. It takes time, and those who want to, get into the space, you have to make a commitment. I urge you to do so because the demand, as Evan said, it's going to increase, and the companies that are coming in mature. I mean, I have a client that is over $200 million in value, market cap. They're going to use Regulation CF. They don't want to be in Kittyville. See? They don't want to be in Kittyville. That's what they call it. We want to work with a broker-dealer, which is a brand new model that's coming out in Reg CF. So there's a broker-dealer called Dalmore. They're the very first VD that's not a funding portal doing Reg CF, because the mature company wants to work with mature players, because what they don't want, and none of their board of directors, none of their management team, their existing shareholders that are VCs, private equity, want to have anything negative associated with it. So,
Oscar, what are some of the marketing strategies that you're specifically seeing? So we're partners with Start Engine, and we know that they brought on Mr. Wonderful, Kevin O'Leary, as an advisor. One of their most successful campaigns is Rayton Solar, and I think they brought on Bill Nye the Science Guy as an influencer. One of their marketing strategies that they recommend is to partner with another like influencer that has an existing audience and email list that you can piggyback of. And The goal is really to help Jenna and any other equity crowdfunding campaigners out there get more exposure to their platform. But Oscar, do you have any like specific strategies of that 8 that you think is like really good for people to know that they can use?
Yeah, so influencer is the only way an influencer works if it's directly connected to your company. I mean, that's the reality. It's Mr. Wonderful. It's ironic, he's Canadian. And he's with Start Engine. So yeah, and that works for them because it's like the hub, right? Like so it'll be interesting to see if it really matures, because obviously you got WeFunder and Republic and others that done it without it. So what are the techniques? So there is obviously social media. I mean, that's a given, right? But there is webinars. Yeah, a webinar. There's companies that specialize in doing what we call webinar techniques for equity crowdfunding. There are people who specialize in getting your information into very specific newsletters. So have you ever wondered how an investor finds out about you? The number one weakness we have in the private markets is that we don't exist. See how dark my screen is? That's where we are. We're in that dark shadow. And we only see less than 2% of the companies. And what is that 2%? Whatever we see in Crunchbase and PitchBook. And what is that? Venture back. So that means the 98% remaining companies in the United States who have raising capital cannot be seen or heard, or not done anything. So there are providers who know how to access channels to investors who subscribe to newsletters, which they pay for. So that's one big technique that's still working, very healthy, bringing in billions of dollars. And these are repeat investors. And we can tell you from KoreConX point of view, the majority of the investors are not millennials. So I can tell you quantifiably that it's not millennials, the major investor today in 2020. 2020 is to Generation X.
So
Generation
Oscar,
X.
you make a good point. And also I want to bring this over to Brian, because what you're mentioning is the concept is the gatekeepers, the communities behind crowdfunding. So Brian, I know you actually create the community. I want to hear from you.
Yeah, and just real quick too, before I get specifically to that, to kind of build on what Oscar was saying, right? I think another perhaps kind of false perception of how this works is we're going to build our campaign page and you post it and then all the money starts flowing in, right? That is absolutely not something, maybe a very small percentage are fortunate enough where something goes viral and that happens. But the reality is, if you look at a lot of the really successful campaigns, it was all of the work that they did kind of leading up to it with the planning. Before you even do kind of your public launch, a lot of these platforms will allow you to do kind of a private friends and family raise still after your Form C is filed, so it's still compliant. But what that does and why it's so important is that on day one, when it goes public for anybody to stumble across this page and find it, instead of having 0 investors and $0, you might have 50K with a couple hundred investors or 100K, and that's really kind of this proof, this social proof and validation that people believe in you. And that can be really important to kind of get some of those people who might otherwise not have kind of looked at your campaign. So yeah, going back to your question about communities, it's absolutely important. And I think just thinking about the number of companies and potential issuers who are going to be coming into, the equity crowdfunding space, I think one of the biggest challenges that a lot of these issuers are going to face is that there are going to be so many people. We're coming up on maybe dozens, of companies a week being listed. Whereas even if you just go back, 2-3 years ago, there was maybe only a couple dozen live at a time. And the kind of challenge with that, and going back to Oscar's, darkness and shadow concept, is that most investors aren't even going to know that you're there. How do you sort through this noise, right, of all these investment opportunities and attract potential investors? So, not to kind of go with like an overused saying, but it's kind of true. Like if you try to appeal to everybody, you're not going to appeal to anybody. So I think, from my own perspective, as someone who's invested in over 130 companies, the really important thing is that, and the thing that grabs me is when a company speaks specifically to me, right? It's something that I resonate with. It's their mission. It's, the person, it's the idea, it's something about it where, I really resonate with that. And those are the ones that I will go and look at. So kind of going back to your communities, kind of question, and think about, like, where are these communities of potential investors that you could get in front of? Maybe it's webinars, to Oscar's point. Maybe it's podcasts. Maybe you go and do interviews with podcasts. There's investment groups out there that may have interests in certain verticals and industries. So all these places, definitely exist out there. It's just trying to come up with a strategy and figure out where are these pockets of people, and then kind of getting your message in front of them, that I think is important.
So I would also add too, because I think, Brian, you hit the nail on the head when you said, just because you think that you're going to launch on a platform, the money will start pouring in, and that's just not the reality. But I do think what was mentioned before, a couple of things. First, on the crowdfunding, was another name for it, is also called fan financing. So the first thing you want to go to is actually your fan base. That's kind of like the low hanging fruit. So, you're missing an opportunity if you're not doing that. Back in also 2012, when, this was even before equities crowdfunding really became, it was before the law was implemented. But what we used to do is we would hold these conferences. I would produce these conferences, and I would have a very successful crowdfunding campaign from the rewards-based crowdfunding world come in and tell their story and share their story and what made them successful, how they really were able to reach the crowd. And it was really interesting because when you hear these stories, most of these people were able to reach the crowd by, in a way, going through their fan base, but people that they didn't even know were fans. Like, there was one company I'll never forget, told the story how they had like this little widget that you attach to your camera to turn it into a tripod to make like the greatest, selfie wherever you are. It was a really cool little gadget. And they weren't getting any traction at all. Their just campaign was going nowhere. And then one morning they woke up and their entire campaign was like 6 times oversubscribed. And they were like, what happened overnight? And they realized that it was actually a blogger from halfway around the world saw the product, liked the product, and wrote about it. So, the best thing to do first, I would say, just from marketing, is you just need to stick with what's in the true roots and DNA of crowdfunding, and that's going to your fan base.
I wanted to take a moment here just because I thought there was a couple of interesting points about the marketing side of the space. And Brian made a really good point that, like, when new rules go into effect, there's going to be a significant amount of inventory to sort through. And Oscar, you did bring up the point that a lot of deals just don't get visibility. And I mean, that's actually the problem that my new company is trying to handle. Like, so Vincent is a search engine. So what we are doing is we are aggregating all of the investment opportunities from all of the qualified portals that we have relationships with. And what we're doing is we're putting them into one place, and we're allowing investors to come to our site and say, hey, what are you interested in? How much are you looking to invest? What are the categories or things that you're looking for? Is it artificial intelligence? Is it restaurants? Is it this, that, or the other? And we also do real estate. We also do private equity, collectibles, crypto. So it's across different asset classes. But I actually think that is the challenge that really is facing most crowdfunding campaigns, is how do you get exposure to the potential investor that you're looking for? And as the space gets more crowded, it's just going to be a free-for-all on Facebook advertising, on blogs, on events, and you're going to hear the same voices and the same talking heads talking about all the same opportunities. And it really is going to it's going to become a very difficult time for for companies to raise capital, at least get exposure outside of the top 1%. On the flip side, I actually think that the amount of supply coming into the market will create a really unique opportunity for platforms to demonstrate their ability to curate. Because really that's what the platforms are doing, or the portals are doing, is they're the ones saying, hey, if it's on my website, I'm saying that it's good, we are backing it and we're standing by it. And I think that, I think someone had mentioned earlier that it's going to go from like 50 to 15. And I think that's really where we are headed, where you're going to see consolidation. You're going to see those who can curate properly and really bring quality to their platform are going to stand out, and the ones that can't bring quality are going to fall apart.
Can I make a quick, not a counterpoint, but I think you said something interesting there, right? And that there are kind of two different camps of platforms. There's the ones that kind of do this deal curation where they say, we think this is a good potential investment opportunity. And then there are those that aren't trying to do that and really leave the investment decision up to the crowd. And personally, you know, kind of speaking for myself, I think the latter group is also really important to keep around. And the verdict's still out in terms of what's going to happen, right? But maybe there are a lot of these companies who, you know, it's a Main Street business that wants to do a rev share and wants to make their patrons, their investors, they should have, you know, as much of a right as anyone to still do a regulation crowdfunding campaign. So the important thing from the investor's perspective is kind of going back to our earlier point, you need to know which of these companies are really looking to provide, you know, a kind of financial return opportunity to their investors versus which of these ones are perhaps more, while doing an equity deal, perhaps more kind of rewards based, or, you know, maybe trying to turn their patrons into, you know, part owners, which can be some value. You know, maybe it's not financial value, but they might get actual value from that. So I think, you know, it's kind of just interesting because you were saying, you know, maybe all the companies, the ones that can really curate will, you know, kind of rise to the top. But I think there is going to be, you know, some room for both of them still in the market moving forward.
Oh yeah. I mean, I think we got a few years before the whole market matures and people figure out what is what. And I mean, yeah, I think that there are, as I said earlier, there's lots of really unique opportunities for not venture scale businesses to use equity crowdfunding or Reg CF to raise capital and bring in investors and fans that are interested in their business to participate. So I love that idea. I think that that's where the innovation should be going. And I think it just creates an opportunity that investors are going to have to figure out where they want to get their deal flow from.
And plus, if they're offering, you know, hybrid offerings, so if you're offering equity as well as, you know, maybe some other sort of reward, maybe, you know, a discount to the product. If it's a restaurant, you know, maybe it's a hamburger or a meal named after you, you know, vanity rewards type of thing, you know, all these different elements, you know, so you're becoming really part of the funding community.
Totally.
And I want to just call out Jenna because you are actively in the process of doing an equity raise. So how did you do it? How did you tell your story and incentivize, you know, supporters?
I think a part of it is the perks that we offer. And I think that's a big one. And then right now we're trying to engage with more media and then engaging exactly as all the panelists suggested, participating in webinar, Instagram Live, working with some influencers, pretty much trying to get the message out there. And then also getting the message out there, not just for equity crowdfunding, but also for spreading the message of the whole environmental education, like why people should even care about these exposures. So that's also really important. Those are some of the strategies that we're using.
Yeah, Jenna, I'm definitely going to check out your campaign because in addition to being a crowdfunding advocate, I am also a hypochondriac. So that's very interesting to me what you're doing, where you could kind of look and see, you know, what may be, you know, for your health and, you know, anything, you know, environmental that you've been exposed to or whatsoever. So interesting stuff.
I would love to hear your advice.
Mm-hmm.
All right. So I know we're coming close to the end. I do want to, you know, thank all the speakers and attendees for being part of this mastermind. We hold these regularly, so once a month. So we'd love to invite all the speakers. And if any attendees want to join the conversation, we are looking for questions. If there's anything that you have, you know, wanting to hear from the panelists, send it over and we'll include it in the email that we send out. But overall, we had a great discussion. You know, here at Crowdcreate, this is what we do. We put thought leaders at the front of the room. We believe in the wisdom of the crowds and how, you know, the insights shared here can help you get ahead in your business.